Something's wrong in the way the walls breathe. Every room feels smaller when it sees me. Static in the air, teeth in the quiet. Even silence feels like it's trying to start shit. I don't trust the ground under my feet. I don't trust the calm when it gets too clean. Everyone's smiling like they rehearsed, like they know something and it's getting worse. I can feel it before it breaks. This place is sick and it's wearing me thin. Every road circles back again. I don't wanna win, I don't wanna stay. I just need help before I decay. If I stay quiet, I disappear. If I run now, at least it's clear. If I run now, at least it's clear. Get me out. Too many signs saying nothing's wrong. Too many voices saying just move on. I see the cracks in the way they talk, like they're drowning but learn how to walk. I sleep light cause the dark feels loud. Dreams don't stop when I'm awake now. Every thought feels borrowed bed, like it's not mine but I'm paying rent. I don't need proof, I feel it in me. This place is sick and it's wearing me thin. Circles back again. I don't wanna win, I don't wanna stay. I just need help before I decay. If I stay quiet, I disappear. If I run now, at least it's clear. Get me out. I'm not paranoid, I'm paying attention. I feel, the more this feels real. This place is sick and it's wearing me thin. Every road circles back again. I don't wanna win, I don't wanna stay. I just need help before I decay. If I stay quiet, I disappear. If I run now, at least it's clear. Get me out. Get me out. I'm not lost, I'm leaving.
Oh, brother, oh, brother, oh, brother. Good morning, and welcome back to another episode of the Matt Kohrs Show. It is a beautiful Thursday, January the 29th. Wherever you are, I hope it's not as freezing cold as it is where I am, but hey, if it is, we're going to get through it together. But here's to hoping, at least mentally, on the inside, emotionally, metaphysically, we are on a nice, beautiful beach, and I'm sure we'll all feel a little bit better as soon as we start locking in some of those tendies today. Folks, we are a mere 25 minutes away from the world's largest casino officially going dingity ding 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 and letting all of us D-gens in, and I have a pretty good feeling about today. Looking at what's going on, I already did a full breakdown analysis in the Discord. I'm seeing a lot of calls in terms of the open interest for the zero DTE versus puts. I'm seeing some call selling, put selling. There's a lot of positive gamma. Stability is returning to the system. We have those clear breakout levels, key technical, psychological, and gamma level, and really the all-time high at 7,000, setting up 7,015, 25. It just feels like the fact that we have a lack of major macroeconomic announcements today means that it doesn't feel like we're really going to get like Sandra Bullock blindsided. You know, it feels like today is going to be a nice quote unquote run of the mill solid technical trading day. The goal of the day really does feel, okay, wait for a trend to develop. See if you can wait for a slight mean reversion in that trend to get in with lower risk and then ride that trend for the rest of the day. I am hoping, I am praying, and I don't know if this is what is actually going to play out because, of course, maybe there's just going to be random headline risk at some point. But as of now, I'm looking for the setup to be a run-of-the-mill trend-following day. I want to get in on the trend, and I want to ride it as long as I possibly can. And knock on wood, hopefully we can do that with low risk. So that's what's going on. Obviously, I'm going to be breaking down a little bit of what happened yesterday. We got the Fed interest rate decision. The TLDR there is no change to the Fed interest rate, which we knew that with 99% confidence. But we also made quite a bit of money betting on Kohrs with what words he would and wouldn't say. The only one that felt like a dagger in my heart was when he said the word pandemic. It was the final question. I was betting on the concept of him not saying the word pandemic, Jerome Powell that is, and he said it in the final question. So that was a little bit of a dagger in the heart, but other than that, the bets were pretty solid, so feeling good about that. Setting us up for today. I guess the other interesting thing of yesterday was it was the first time I ever traded silver, and I thought people like myself trading the NQ contract on futures were degenerate, but honestly, if you're trading silver contracts, and I'm not talking about the micros, I'm talking about like the real McCoy, you should talk to someone. Seriously, like call a friend, call a parent, go get a puppy, do something, because there is clearly a void in your life that you are trying to fill. And it is, the word degenerate does not cover what trading full size silver contracts are. So I gave it a test. And dude, we were riding the dragon yesterday. I don't know. Like I would imagine it's, I don't know even what it's equivalent to. Like what, jumping out of a plane and trying to catch your own parachute midair? Like it is insane. It is absolutely insane. So if you choose to engage in that, first of all, obviously with your trades, I wish you the best of luck. But more importantly, I hope you find help. I really do. I hope you find whatever you're looking for in this life. So that was a little bit of excitement from yesterday. And that's the major stuff you need to know, setting us up for ideally a little bit more stability today. And of course, we have a bunch of earnings. Yesterday, we heard from Tesla. We heard from Microsoft. We heard from Meta. We heard from IBM. We heard from Southwest. Today, we're going to hear from Apple. So I want to get into those kind of interesting news. Meta, I would say, is the clear winner from that group. Microsoft is the clear loser. Tesla's doing all right. And there's obviously more earnings coming up. And then tomorrow, we're basically going to get on top of the earnings. Well, from the one tonight, tomorrow morning, we have SoFi, American Express, Chevron, Exxon, and maybe one more in there. That's tomorrow morning. Also, we have a PPI report, another inflation report, and we also have, I believe, a Chicago PMI report tomorrow. So those are all the things that I just want to like call out, put on your radar, just so we're a little bit more ready. Of course, we're going to get into a little bit more of the nuanced detail, but I would say, yes, I'm looking for today and tomorrow to be a quote unquote easier trading session. But I do want to call out the fact that this weekend, as we go from January to February, Saturday night at midnight, that is when the US government right now has a 50-50 shot of shutting down. So that's another thing that obviously, I don't want to get too political on the show, but a lot of the times politics does have a huge influence on both the economy and the stock market. So clearly it's not just like that we're going off on a tangent. It can be important to cover. And this is one of those situations where, yeah, it is actually incredibly important because the government shutdown clearly has an impact on the economy and the stock market. So that's another thing that you should be aware of, obviously, for this weekend, for whatever your trades are. But I just want to call that out as a potentially increase in vol type of environment. So we're going to be covering that a little bit as well. But folks, I hope you survived the FOMC day yesterday. I myself didn't really trade any options. And when I say didn't really, I mean I just didn't trade any options. I don't like trading on FOMC day. I did a little bit of degenerate stuff with you, but in terms of my quote unquote main accounts, I just did one little scalp trade. I think I got 1 or 2 ticks on NQ, basically just paid for my commissions, locked in a trading day, and I'm moving on with my life. I mean, historically, I have a 50-50 win-loss rate on FOMC days. What I don't like about it is the magnitude of those wins and those losses are gigantic, to the point that it's just, in terms of the safety of my account, it's kind of blown out the risk parameters. So I just don't like to do anything, because I know I have a 50% of winning quite a bit, but I'm more so focused on the 50% of chance of losing quite a bit. And right now, based on the current state of both my option accounts and my futures accounts, it's just not worth the risk to me. Truly not worth the risk to me. Am I going to be trading silver moving forward? Only to do degenerate stuff with you guys. Like, if you guys are trying to just go wild one day, buck wild, I'm going to do it, but it's not going to be a core component of my trading. All my algorithms and research and just I guess my time on the felt, if you will, is related to ES and NQ, a little bit of the Russell, but mainly ES and NQ. So right now, if I did it, I'd have to put in the same quote unquote 10,000 hours in silver. I'd have to review the charts, get the statistics, like learn more and more about it. And right now, like I said, yesterday was my first day, a complete novice. So I'm down to do it in terms of the stream, to have fun, just to blow shit up. But in terms of like, do I think it's going to be a core aspect of my trading? No, not really. But hey, you never know. You never know where this world is going to be going. So, but yeah, hey, if you're doing it, if you're asking it, I'm assuming that it's because you're trading it. It is wild. Obviously, if you're trading the physical product, if you are trading options, it's not as crazy. Like, when I'm talking about crazy is the futures, and there's two types of contracts. I'm talking the main contract for silver. It is absolutely insane, like truly, truly insane. So we could come back to that a little bit. Before we really get going, if you haven't already, don't forget to like, subscribe, turn on those notifications. I'm getting more and more reports. This seems to happen like every 2 to 3 months, where people are saying, dude, I'm not getting notified that you're live. It's not showing you as live. It's a known problem with the YouTube. Like I said, it seems to happen like once a quarter. The best thing I can say is at least make sure you're also there on Rumble. They seem to be better about it. And other than that, whether you're on Rumble or YouTube, just make sure your notifications are on after you subscribe. So just a quick little call out there. And on that note, let me do my job and get rocking. S&P 500 futures rise after Meta soars on earnings, but Microsoft dive limits game. So, okay. Overall market, we did hit a new all-time high yesterday. The S&P 500, the index is SPX, the barometer for the overall market. We did hit a new all-time high. I know on the surface level that sounds really good, because it seems like just everything's expanding, but in reality, it's not as good as it is like it sounds. It's more so because the dollar is getting devalued. Think about it. If you are trying to assign a value to a particular product, I don't know, let's say this cup of coffee, and this cup of coffee is worth X. Well, if the thing that you're valuing it in, let's say Matt bucks, all of a sudden becomes worth less relative to the entire universe that you're comparing it to, well, that drives the value of this coffee up in Matt bucks, because the thing that we're valuing it in, Matt bucks, is getting devalued to the rest of everything else. There is no difference here. The S&P 500 is going up, and it's partly going up because earnings are good, and we are seeing a little bit of an expanse in the economy, at least according to the most recent GDP report. So I'm not saying it's exclusively because of this. Like, things are good, but they're not as good as the market shows. Like, yes, they're more bullish than they are anything else. But then a real driver of why we are going up and up and up is because the thing we are valuing it in is going down and down and down. So for it to even retain its same overall value, like the purchasing power, if you will, well, it has to keep going up just to like kind of balance out how much the dollar is going down. So just wanted to call that out. But regardless, if you've been betting on the market going higher, yes, we did hit an all-time high. The Qs, the NASDAQ didn't hit an all-time high, but we got very, very close. In fact, I should probably set up an alert on this today, just in case we do hit a new all-time high on the NASDAQ, which is very much in the cards. We're currently trading at 633, and the QQQ hit 637. The actual index is NDX, and you can see we got even closer to that. That's 26,182, so probably worthwhile to have an alert there as as well. If we go to the small cap sector, we hit an all-time high last week, and right now we're just a little bit pulled away from it. Gold hit another new all-time high basically every single day. It's just squeezing. People are betting against it, and they're simply too early and they're getting blown out. And then when you pair that up with just FOMO and people chasing it, we're just going higher and higher and higher. And so is silver. Silver hit a new record high. So gold, a new record high, silver, a new record high, and I believe copper also just hit a new record high. If not, I mean, my data is not going back that far for whatever reason. Why is it not? How do I get the full copper chart? How do I get the full copper chart right here? Is that a record high? At least as far back as my data goes, it is a record high. So gold all-time high, silver all-time high, copper all-time high, palladium, almost all-time. Nope, never mind. Scratch that. Palladium, not an all-time high, but very high relative to where we've been. So these soft metals, these commodities, they're ripping. Even oil's up. Oil not really going up for the same reason. This is more because of potential war conflict. But anyway, oil's also popping. So assets are going up. Commodities are especially going up. And obviously, I hope you are getting yours. Brent crude hit 70 a barrel as Trump ramps up Iran threats. So not only do we have a lot of tensions here in the U.S. with the craziness of Minneapolis, but also remember globally, as certain things are calming down, other things are heating up. So this is one particular situation, the Iran situation heating up. And remember, where it is geographically important for oil production and also oil shipping. So if tensions boil over, yeah, it could impact the overall supply. And if demand remains constant, guess what happens to price? Denmark lauds constructive talks with U.S. over Greenland. So as the Iran situation is getting worse, the Greenland situation is getting better, quote unquote. Now we are back on track. The Danish foreign minister, Lars Løkke Rasmussen, Old Lars here, on Thursday welcomed constructive high-level talks with U.S. over Greenland's future. Things were escalating, but now we are back on track. His comments come shortly after the U.S. President Donald Trump said he had the framework for a future deal regarding Greenland. So a little bit of optimism there, or maybe I should better say tensions simmering down kind of on the global scale. But other tensions like Iran's getting worse, Greenland's getting better, but then the U.S. is getting worse. Trump and Democrats make some progress and talks to avert shutdown. So the odds on the government shutdown are really interesting. And right now, there's a 59% chance that the government will shut down. Now, for the longest time, as in up until January 24th, they thought they were going to solve it, as in there was only 10% chance of a shutdown. Then by late on the 24th, from commentary from President Trump, it sounded like the government was going to shut down, and we quickly shot up to 72%. Then, based on more recent commentary, it dropped from 75 to 43, and now slowly but surely today we are climbing back up. They basically have today, Thursday, tomorrow, Friday, and most of the day on Saturday, if politicians even choose to work on Saturday to get this solved. So this is a thing that we have to pay attention to. There's going to be high-level talks today, tomorrow, and Saturday. So right now, it's pretty much 50-50, technically 59-41, but it feels like we're just flipping a coin on if the government will be shutting down. If you're just joining right now, just so you know, the shutdown would be at midnight Saturday going into Sunday, basically the start of February, which isn't that insane. We're already done with the first month of the year. It feels like time is flying by. I don't know what's going on, but it feels like the past couple of years, especially here in New York City, that the month of January just drags on. It's cold. It's miserable. There's no sun. And I don't know what's happening this particular January, but dude, we are flying by. I guess maybe I'm just becoming an old man because time really seems to just be absolutely accelerating. Anyway, back to individual stocks. Yesterday, we heard from Microsoft, Meta, Tesla, Lam Research, ServiceNow, IBM, Waste Management, Sands, the casino. Today, this morning, MasterCard, Caterpillar. Tonight, we're going to hear from Apple, SanDisk, Visa. Tomorrow, SoFi, American Express, Verizon, Chevron, Exxon. As you can tell, we are in the middle of earnings season. Yesterday, we heard from 3 of the top 10 companies in the world. Today, we're hearing from Apple, which is another top 10 company. I mean, pretty much this week, we are hearing from anywhere from 30 to 40% of the market cap of the entire S&P. And then obviously we have even more earnings next week. And don't forget, next week being the first week of a new month, we're also going to get reports like the unemployment report. That happens the first Friday of every new month. So let me quickly review some of these names just because reading chat here, I know some of you are playing them, but not everyone. So let me just kind of quickly go through this. IBM jumps 8% on an earnings beat. That is awesome. So if you're playing IBM, congrats to you. Southwest Airlines forecast surge in 2026 profit after new seat bag fees take hold. So a little bit of an update there. I remember recently we were covering Delta, so I just wanted to cover that. But I assume most of you are more interested in these tech plays. And this is probably the best visual depiction of what's going on. Tesla crushing, Meta crushing, Microsoft as fucking dumb as they possibly come. Like, honestly, this is the best depiction of what's currently going on. Tesla tops estimates for quarter, but wraps up first annual revenue drop on record. So at the initial reaction on Tesla was actually really good. And then the classic thing of Elon and the board get talking and they give some back. But with that being said, it is still in the green from the announcement. So I just want to call that out there. But obviously it was looking a lot better at 450, but overall still in the green. Tesla to invest $2 billion in XAI, Elon Musk's OpenAI competitor. A couple things to really get into here, but I would say the major thing is this kind of seems like an interesting play where some of the better engineers from Tesla went over to XAI, and the fact that they're investing in it kind of then opens up the bridge where maybe these high-level engineers and programmers and management can actually kind of be dealing with both. Just some interesting stuff I was reading on X, so I just wanted to share that with you. But obviously a large investment and is becoming a more and more of a serious player. On the flip side of it, Microsoft stock down 7% on slowing crowd growth, light margin guidance. So if we look at MSFT, this was the one that got brutalized, currently down 7.1%. Yesterday was in the low 480s, currently at 447. The daily chart is horrific. It just got back up to maybe a daily chart trend reversal, and you can see it is now getting demolished. And this isn't a recent phenomena. It's been going on pretty much ever since October. I mean, it was really, really ripping from May till about July to October doing nothing, and October to now, it just cannot catch its footing whatsoever. So Tesla, all right. Microsoft, horrible. And then obviously, if you haven't seen it already, the belle of the ball today is Meta. It closed out the day at 669. It is currently at 734. Look at that pre-market action. We were in the Discord yesterday saying, yo, is it going to break 700? The fact that we're talking about 735 right now is insane. How many of you in chat currently have calls on Meta? How many of you are degenerately playing this? I just 2 days ago on Tuesday, loaded up on Meta in my long-term investment account. So I'm not playing options on it, just to be transparent. But the fact that I got to fill around 669 and it's already trading at 736, it makes me feel like Warren Buffett is as washed up as they possibly can be. But I know some of you, I'm betting some of you are playing it more short-term, probably long some calls. And seriously, congrats to you, because I mean, it's up 10% right now. This thing is just ripping, absolutely nuts. Meta overshowers Microsoft by showing AI payoff in ad business. The Facebook parents' results highlight the advantage of its simpler ad-focused business model. And on top of that, finally, the market is like just breathing a sigh of release of finally Zuckerberg is dropping this concept of the metaverse and reality labs. And technically it's still alive, but they're putting less and less money in it. And it is obviously the market is rewarding them for focusing on AI rather than the stupid fucking reality labs. Meta shares jumped 10% on stronger than expected revenue forecast. Meta's reality labs post a $6 billion loss in fourth quarter. But once again, that's a big loss, but I want to like, they're cutting down and down and down. So it feels like that particular department is on the way out, and they're starting to put more money into AI. And like I said, the world is saying, finally, you're focusing on the right thing. And obviously, the market is very much rewarding it. Meta's Mark Zuckerberg gets green light from Wall Street to keep pouring money into AI. And honestly, yeah, clearly it is. It's rocking. So very, very happy. I just loaded up on Meta. We were talking the day I did it. We talked about it a ton in the Goonie Trading Discord, and it's already paying dividends. So I understand that this is a short-term movement and I put it in my long-term account, and so whatever, a lot can happen between now and the time I decide to get rid of Meta, because I'm going to be holding it for months, if not years. But in the short term, the fact that I just got into it and it's already up that much makes me feel real good about it. I didn't know if we were going to have time to talk about this, so I want to talk about Service Now. Service Now. I just really quickly want to show you guys something. So this stock is getting beaten up by 6%. It's been getting beaten up for a while. It's just trending down and down and down. It acquired MoveWorks Inc., whatever the hell that is. It's never paid a dividend. I don't even know what sector they're in. Do any of you know what ServiceNow does at all? It engages in the provision of end-to-end workflow automation platform for digital businesses. It is a cloud-based solution embedded with artificial intelligence and machine learning. Sounds like it's just like buzzword. But the reason I want to cover this has nothing to do with, I don't think it's a trade opportunity. I'm not saying to buy it, to sell it. This morning, when I was preparing my show, I click around and I try to consume all the news I can from Twitter, CNBC, Bloomberg, Business Insider, Wall Street Journal, Financial Times. I like to read as much as I possibly can in the morning. It's the only reading I like to do throughout the day. And as I was reading, I saw that this company, which I don't know shit about, reported. And I saw that it was down. I was like, okay, some random company took a hit. And then I started to think about, okay, sometimes like certain companies, they have leadership and faces of the company, and sometimes that could be a good thing, sometimes that can be a bad thing. And when I clicked on this one, I don't even know, it must have been CNBC that served it to me. They just showed a picture of the CEO, and I thought it was the most wild fucking guy I've ever seen. This feels like almost a person from the Righteous Gemstones, who any of you have seen the Danny McBride video. Like, if this guy came out and was like, you know what, I'm going to be a televangelist. Like, this has to be one of the most insane looking fucking CEOs I've ever seen. Bill McDermott. If this guy's like, you know what, I'm done being this. Yeah, Baby Billy. Doesn't this feel like it's Baby Billy? Like, it feels like an anime character, like almost like the cartoonish villain of an anime, a televangelist. Like, this is a guy who I would bet a lot of money he starts every board meeting by just like blowing a line of coke. Doesn't it? Like, something, he's like, all right, we're starting the day. Like, if this guy is not having 50% of his board meetings in Thailand, I don't know who is then. I really don't. I just, in a weird way, this is the kind of guy where if I were an investor in the company and I don't own any stock, I feel like he would do the most insane things to protect my investment because he wants to like retain his own net wealth. This guy would probably do crazy shit. He definitely would do crazy shit. So I just needed to share that with you because like when I saw it this morning, I was, dare I say it, flabbergasted by like just the aura, the vibe. I like just, there's so much going on, so much going on. So just wanted to share that with all of you. Anyway, if you haven't already, sign up for the newsletter. It's free. MattKohrs.locals.com. It comes to your email inbox every single Sunday. I break down what's going on in the market, cheat sheet for earnings, cheat sheet for all the major macroeconomic events, and then I give you the seasonality of each individual day. And today, historically, based on the last 28 years worth of data, it is leaning bullish. It's not the most bullish day we've seen for quite a while. For like 20 years, this day was nothing. But then over the past 7 to 8 years, it's actually shown a little bit more of bullish seasonality. So right now, just from a pure stats perspective of how does this day individually perform, it does actually favor the bulls. So if you're looking to fade the overall market, I mean, I wish you luck, but you are fighting the odds of the situation. And then tomorrow is actually very bullish. For quite a while, we haven't had strong seasonality days. This is actually one of the stronger ones we've seen in a minute. I mean, think about the odds of this. Over the past this one's 24 years, the Bulls have won it 75% of the time. So 3 out of 4. So once again, I'm not guaranteeing it. I'm giving you the odds right there. 3 out of 4 chance. But the Bulls are looking pretty freaking good. Pretty good for today and even better for tomorrow, which tells me that that pretty good shot of, even though we have this current all-time high of 7,002, which we clocked yesterday, I think it's going to be short-lived, and we're about to be seeing another new all-time high. So just wanted to call that out. Now, for those of you day traders, scalp traders, these are all the key levels I'm personally watching today. As I always do, I mark out the previous high, low, and close. That is the green, the red, and the white. That is just important pivot levels, important psychology levels. So pay attention to those. The white box is the transition zone, and then the yellow horizontal lines are the key levels in terms of where the big money is positioned. And it looks like we have some sort of, not an iron condor, a condor. Someone is long a condor, looking either, this is an interesting play. Someone is either, this is opposite. An iron condor is where people are looking for it to stay within bounds. The play right now is actually someone is either looking for a break above 7,015 or a break below 6,990. So it's the opposite of an iron condor. This is a brand new position created within the past 10-ish minutes. So once again, they're looking for the break above 7,015 or below 6,990, and they're looking for it to continue to trend in one of those directions. So definitely worthwhile to pay attention to. So they're either looking for this breakdown or this breakout. Obviously, big money plays are always of interest, and we should probably be paying a little bit more attention to where that big money has confidence. So very quickly on that note, dingity ding ding ding, the world's largest casino is now open. Best of luck to all, play responsibly, and if not, have fun. Remember, it's just money. You can't take it with you when you go. So Meta is by far the belle of the ball today, currently up 9.95%, while Microsoft is, what's the opposite saying of a belle of the ball? Like what's the opposite of the belle? The witch of the ball? Whatever the opposite saying is, like the ugly chick in the corner, that's Microsoft. So we're putting them head to head, the best one and the worst one. We're going to watch them just to see how things are going. Of course, you also have gold and silver going crazy. If you guys want to watch that, I'm more than happy to put that up. But gold's up 5%, silver's up almost 7%. IBM's also looking pretty good. So we finally got some movement. We have a lot going on. Just to, I guess, show you guys right here, I haven't traded anything yet today. I'm being good. I'm sticking to my discipline. I have quite a few accounts. I have 5 on Take Profit, 20 on Apex, 15 are the ones that I keep rocking with. I have 5 on FFN, and then I have 3 on Lucid. So we're trading with quite a bit of sim capital today, and let's see if we could make some moves. So I don't really plan on doing anything out of the gate. I think I'm just gonna wait to see what kind of trends I'm noticing. I do see the 4 hours very bullish, the 30 minutes testing, the 5 is bearish, and the 10 is bearish. Same thing on the NQ here. 4 hours very bullish, 30-minute, 5-minute, and 10-minute are actually all going to be on the bearish side. Basically, they were looking good up until about 4 a.m. this morning, and that's when things started to break down a little bit. So what I would like to see is actually a clear bottom put in, and then just a nice kind of recovery off of that. If you are bearish this morning, it feels like the closest evident target is this going to be the extended hours trading low, which is around 26,085 if you're trading that NQ contract, which really is not that far away. It's pretty much right where my cursor is. So if out of the gate you were feeling bearish, if you maybe just faded this at VWAP or something, 85, 86 would be a target. But once again, just to be clear, I'm not trading that. But remember the stats of this. If you look at the extended hours, the overnight high and low, which the low is 26,085, the high is 26,296. Those are taken out in excess of 85% of trading days. Those are very good targets to have if you can get on the right side of the trend. So I just want to call that out to everyone. That's what I'd be watching. But in reality, we're only 3 minutes into the trading session. So personally, I'm just waiting for more data. I'm very much, if this is your first time in the show, well, first of all, welcome. But the major thing you need to know is I try to base all of my trades on data rather than gut feel. That's a personal decision. I just find that when I trade with my gut, I'm going to end up losing money. And then if I trade with actual statistics, which in the current day of AI, it's really easy to find these types of things out. Like, you don't have to have a math background. You don't have to have a coding background. All you have to do is spend the time with AI, and That's what you need to know. The Qs are breaking down. The Qs are currently taking out their low from yesterday. So maybe a little bit of a double top situation, or this could be a little bit of a fake out. This might be a legitimate buying area, the low of yesterday. It's also right at the overnight low. So we're right at a zone that it's a 50-50 shot. Buyers might step in here and we might rocket back up to VWAP, or this could be a breakdown. Your guess is as good as mine. We could watch a little bit of this on Bookmap, see how we hit that level and buyers stepped right in. This is the importance of tracking those recent extremes, the recent pivot levels, incredibly important, because people, it's more of a psychological phenomena, but traders like you, me, high frequency traders, hedge funds, family offices, whatever you want to call it, we all have the ability to see the recent extremes, and people commonly put their orders there, whether it's to buy or sell, depending on what they think is going to happen. And that's commonly why you see market reactions at those levels, is because a lot of people, it's a psychology aspect, like they see it, so they're like, okay, cool, I'm going to place my trades there, and then very quickly it becomes a self-fulfilling prophecy that the market actually reacts there. I mean, even this, we bounced from 85 all the way up to 102, all the way back down to 63. Like, just a lot of movement thus far. So I'm going to be ideally calm, cool, collected, and my goal is just to keep my sanity today, be on what I perceive to be the proper side of the trend. I'm not really trying to do any hero moves. Right now, I'm not the biggest fan of the mismatch, the fact that the 4 hour is bullish, but the 5, the 10, and the 30 are bearish. The Nasdaq's the same thing. The 5, the 10, and the 30 are bearish. However, the 4 hour is bullish. It does seem as if this morning, even though price is getting hit, there was some longer duration call selling for the first 4 minutes, but it's now gone flat. And then on the Mag 7, there was some call buying, and now there's some call selling. So even though price is taking a hit this morning, I do want to let you know that the delta movement in basically the options market is telling us a different story. The options market is actually very flat as price is currently taking this hit. So I'm not necessarily the biggest fan on chasing it because it could just be post FOMC, post earnings excitement, people may be taking some of their profits on just like the core underlyings. Obviously, we're not necessarily seeing it in the world of options. So I'm not going to be chasing this to the downside, at least not at this minute. It's just a little bit too early for me. If you choose to do it, I'm not going to tell you you're wrong. I mean, obviously, if you did it right at market open, you probably already made your money on the day, and you could already go take lunch. So I'm just letting you kind of know like how I see it. I'm not saying that this is definitively right or wrong. In fact, if you've watched the show for any amount of time, you know about half the time I'm right and half the time I'm wrong. So I'm just letting you know what I'm doing, but I'm also trying to remind you guys that it's not gospel. Sometimes I'm on top of the ball and doing everything I need to, and I have a good read of the market. And other times it feels like maybe my parents dropped me one too many times when I was an infant and my brain was mashed potatoes. So once again, just commenting on how I see it, but it is what I say is definitely not the end all be all. But I do find more often than not, I'm happy when I wait and I'm patient rather than rushing it. We've all been there, especially as active day traders, scalp traders, something like that. We've all been in those moments where you're like, oh, you see the movement and you chase it. But seriously, if you write that down, if you journal that out, how many times are you actually happy you chased it right away? Opposed to like 5-10 minutes later, it goes against you and you're like, oh, I should have just waited for this because I would have had like less risk. I find for me, most of the time when I feel that urge to chase something, it's generally beneficial for me to very much fight that urge and wait another 5 or 10 minutes, because generally I could wait for some sort of mean reversion and take the same trade and just do it so with less risk. What's going on with Palantir? It's been taking a hit recently for sure. People are just choosing to buy it and sell it at a lower and lower price. Technical breakdown, it's below all the EMAs. You have technical support at 147. You have technical support at 142. You have lower highs, lower lows. So based on just this time frame that's on the chart right now, it's bearish. Lower highs and lower lows by definition is bearish. Obviously, if you zoom out, it's looking very bullish. But if you're paying attention to it above 175 or just this zone, basically, let's just say from November till now, it's not looking so good. So yeah, it's the classic shoulder, head, shoulder. The neckline breakdown would be right here. Yeah, people are, you never know why people are choosing to buy or sell, because there's probably like a 6 or 7 figure amount of people engaging in this stock on any given day. So you'd have to ask all those people individually, why are you buying? Why are you selling? So I can't really tell you why people are choosing to buy and sell at this level. All I can comment is on the price action and the fact that it's taken a pretty decent hit from 207 all the way down to 151. But I think a lot of people maybe misallocate their trading time trying to explain why something is moving, when in my book, it doesn't matter. The why is a better question for long-term investing. Like, why will AI be more prolific a decade from now? And the reason time matters is because you're getting rid of noise. AI could be huge, like even it's already huge, but bigger a decade from now. But that doesn't mean it can't have like one bad day, one bad week, one bad month, one bad quarter, and it could still generically keep trending up. The shorter your time frame, the more noise involved. That's a mathematical, statistical comment of there's more randomness. So if you're a short-term trader, day trader, scalp trader, or even a shorter-term swing trader, like, oh, I'm in it for a couple days, couple weeks, what matters is the actual price development, not the why to it. Because remember, right now, someone out here might have a very robust fundamental explanation of why Palantir is taking a hit. Of like, no, the first earnings of the new year, it's always bad because of government budget. Like, okay, yeah, maybe that sounds smart and you might be right, but also it doesn't matter. You might have another person saying Palantir is going down because Mercury is in retrograde. It doesn't matter because we're not going to ever be able to find out who is technically right, because once again, to find out who's actually right, you'd have to go to every single trader in the world and say, why did you choose to sell? Why did you choose to buy? And we're never going to get that. So like, why waste our time? Why waste your time for shorter term trading, trying to explain the why rather than, oh, no, this is just what's happening. This game of like prediction and the explanation of prediction is, in my book, actually useless, because what matters is the actual price development, the actual options trading, the current risk reward, and seeing if you can either take a mean reverting trade or a trend following trade with that minimal risk and highly better, or ideally better reward, and really proper risk management. But in that particular checklist, the things that you're looking at and considering, the explanation of why it's going, it just doesn't matter to me. It really doesn't matter to me. And I would actually like vehemently argue that it shouldn't matter to you, because you don't get a bonus prize. You don't get extra money for getting the price movement right or wrong, but then the explanation right. You're only making or losing money by being on the right side of price movement. Not the explanation is not in there. Matt, why is the Dow running but SPY and Qs are diving? I'm a bit new to the market. Shouldn't all three be more or less running in the same? No, not at all. You have to think about what they are. The S&P 500 is considered to be 500 of the biggest, best stocks that ideally explain the state of the overall economy. The NASDAQ is more of a tech-heavy index. It's 100 of them, but really the better definition of the NASDAQ is the lack of financial plays. So the SPY has a lot of financial plays, the NASDAQ doesn't. The Russell 2000 is thought to be the barometer for smaller businesses. When I say smaller, they can still have like $2 billion in market cap. They're just not as big as the SPY or the NASDAQ plays. And then the Dow is just like another subset. Like they're all particular subsets of really the Russell 3000 and are explaining different parts of the economy. And the Dow itself is like an even larger group. When I say larger, like the companies themselves are kind of like 30 of like the biggest guys in the market. It's like I believe they're all within the top 100 of the S&P 500. You can fact check me on that, but they're all just describing a different part of the economy. Yes, there is overlap, and it's very, very rare for one to be exploding and the other one to be plummeting, but they don't move in lockstep. They don't move in lockstep at all. And you could, and the weightings, I guess now that we're just talking about it, the weightings do change. Like for example, the heaviest weighted ones in the NASDAQ are similar to the SPY, but they're not the exact same. And they're completely different in the Russell, and they're completely different in the Dow. So they're not equally weighted, I guess is what I should be saying. So it's not like every single one has the exact same impact on the ETF that it's in. Microsoft is in the SPY and it's in the NASDAQ, but the weight in those, like how much it impacts it, is actually different, which is good to know. And if you want to know what's in it, it does change. They do like kind of cycle what's in these things and the percentage and blah, blah, blah. And that's easily found online. Do you think CoreWeave has upside? Yeah, I was just looking at the other day. The technical setup is nice right here. I like that. It was bullish, got hit, overshot, double bottom, kind of overshot that, recovered, and it's holding it. So I like that it's on the bullish side. My evident target would be the upside gap fill at 125.88 for an active trade. That would be what I'd be looking at. I can't comment really fairly on it from the perspective of like would I want to invest in it? And I'm not saying that it's a bad long-term investment. I just think that there's more evident AI investments like NVIDIA, Broadcom, ASML. When I'm looking at investments, I want like clear, evident blue chip stocks that we can find a lot of information on. And CoreWeave is just not a blue chip stock. I'm not saying it's bad. It's just not a blue chip stock. Someone is saying SPY is puking. The SPY is down 0.4%. I guess if you went long a bunch of ES contracts or SPX calls at open, you might feel like it's puking. But anyone who has the ability to look at a chart would say 0.4%, 0.3% is not that like crazy. What's killing the SPY? I thought it'd be Microsoft. Once again, you guys are asking the wrong question. It does not matter. It doesn't matter what you think the perception of why it's happening. What matters is that price is going down. What matters is that we're at these key levels. We're at the low from yesterday and low the day before. What matters is that we're at a key gamma level, key technical level, key psychological level at 69.50. That's what matters. Don't waste your time going around on charts and saying, oh, is it Microsoft? Oh, did Trump say something? Oh, is it like, yeah, you may feel a little bit more comfortable, but it's not the right question. The right question is, okay, what levels are we at? Are we at a potential bounce level? Okay, what's going on with options flow? Are buyers stepping in? Are sellers stepping in? What matters is the reaction to the development. Don't waste your time trying to explain it, because if anything, that gets you in the maybe like dangerous position of you might be super confident in your explanation and be like, okay, because of this, I think it should keep going or I think it should bounce. But what if the price action is the opposite? You might be a little bit too beholden to your analysis of what's going on that you might be unwilling to let the loser go because you're that confident. But confident or not, price is price. Price is what's either making you money or losing you money. So once again, make sure you're asking the right question. It does not matter why it's going down. What matters, especially as an active trader, is that it is going down. And okay, so we're identifying trend, cool, 5 minute, 10 minute, 30 minute bearish, 4 hours currently testing. Okay, interesting to point out. Then we can say, are we at a key level? Yeah, we might be at a key level. Right here, it's marked out. Not only is it the 50% retracement of the transition zone, but we're also at the key technical, psychological, and options level of 6950. And then from there, you can see that we're coming up into a no to positive gamma. There's even more positive gamma at 6925. See, you see what I'm going through. Like, and even here, okay, we're at the spot gamma implied 1 day move low. So like maybe you should be a little bit like careful if you want to chase it. And if you are doing it, obviously make sure your risk is anchored to like a reasonable level. If it starts to bounce, that's not the most insane thing, because like I said, we're right at a key level, and this might be where shorts decide to lock in. This might be where longs decide to like create a new position. That is the analysis you should be doing. The analysis should say, what is the trend? What's the mean reversion? What are the key levels? What's my risk reward? What should be my sizing? Like literally, it's a waste of time for you to be trying to explain why the price action is happening, because regardless of your explanation being right or wrong, the price action is the price action. Like you are not changing the price action by being able to explain it or not. You're just not. What is the performance of the dollar for the month and for the year? I don't, just pull up DXY. It's not up, so I don't know. Here, where's January, right. For the month and the year, well, that's the same question. It's down 2%. Look at that. Surprise, surprise. Where are buyers stepping in? Right at the key level that was called out before the market opened. This is why you need to mark out these key levels. I am not saying that we always bounce at key levels. I'm not saying we always get rejected at key levels. Of course, you could break out, you could break down. The point is you look at the key levels, you know where they are, and then when price gets there, that's your indication to, oh, I need to pay attention, because if it's breaking down, these are kind of just like arbitrary levels. Of course, like, yeah, you might want to pay attention to 60 and 50 happen to be close. But if you were watching at 60, I'm not saying just arbitrarily buy, pay attention to it, and it sliced through it like it was a hot knife on some butter there. And then guess what? We got to the next key level, and all of a sudden, something kind of changed. We got to the level, see how the options movement started to change a little bit? Okay, that's interesting. Mag 7, we got to that key level, it started to change. The point is you can't be like so married to this idea of like, this is the level, this is what I'm going to do. I deeply believe, and hey, take this with a grain of salt. These are just my own thoughts and opinions. It's more of identify the key levels, maybe set an alert when you get into that range. And then from there, just say, okay, cool. Like if there's a reaction setting up, a risk reward profile that you accept, yeah, have at it with the trade, stick to your risk and move on with your life. And it's honestly that simple. Right here, I cannot tell you, are we going to keep bouncing? Are we going to break down? I am seeing lower highs. I am seeing lower lows. I'm seeing momentum is bearish, bearish, bearish. I'm seeing momentum is bearish, bearish, bearish. I'm seeing the options flow actually literally just took a hit after a little bit of profit locking in. So if you're like, you know what? That was the reversion I'm looking for, and you want to take that short, and maybe you took the breakdown short at 82 and you're risking 608. Okay. That's not bad. That's about a 25-point risk based on today's range. You just size it accordingly. So if you're wrong, you can survive it. But the point is to not just arbitrarily chase it, because as much as it looks good and good and good, if you were the sucker who got in right here, you could bottom ticket and it could go up. Of course, if you decided to chase over here, it would have worked. But think about how that plays out in the long run. Do you think you're always going to be on the lucky side of things where it just keeps going that way? That's why I deeply believe you need to be anchoring it. So like if you wanted to chase it, I guess like 41 was reasonable because you had the risk at 49. That wasn't bad. Even this short right here, this breakdown at 60, you could risk 90. You could risk 609. You would size it accordingly. So if you are wrong, you can survive that hit. But I don't mind it. You waited for a little bit of a reversion. Whenever you wait for the reversion, it's lowering your risk. And now you're trading with trend. And then from here on out, maybe it goes, maybe it doesn't go. But if you took that short at 94, if you took the short at 84, if you took the short at 74, I think those were all very acceptable trades in terms of good trading decisions. Remember, good trading decisions don't necessarily mean you're going to make money on that trade. Obviously, in aggregate, you hope you're making money. That's what good trading decisions lead you to. But on the one trade, you can make the worst decision ever and make a bunch of money. You can make the best decision ever and also lose money. Making good decisions does not guarantee making money. Making bad decisions doesn't guarantee losing money. And I think we all kind of get tied to that concept that like, it's only a good trade if you make money and it's only a bad trade if you lose money. And I would, out of all of the things that we're talking about today, that's one thing I would strongly argue against. You can do dumb shit and make money. You can do really smart stuff, really smart decisions and lose money. If you are on an individual trade, grading yourself on did you make or lose money, that's dangerous. Of course, over many trades, over many data points, yeah, that's the goal, is to make money. I'm not blind to that fact. But just be careful assuming that because you made money, you made the right decision, and be very careful assuming that because you lost money, you made a bad decision. Those aren't necessarily like perfectly correlated. They can be, but it's a little bit more complicated than that, just because there's a lot of noise. There's a lot of nuance in the market. There's a lot of random movement. So as long as you're sticking to your system, and more important than that, as long as you're making trades where you're accepting of the risk time and time again, you will survive this game. The best traders are the best risk managers. I know I sound like a broken record because I say that all the time, but it is my job to drill that into your head. There is no good trader. There is no profitable trader who would ever disagree with my statement that the best traders are the best risk managers. And if you think you know someone who is a profitable trader and they're disagreeing with what I'm saying, I would bet my entire net worth that they are not a profitable trader. Every profitable trader I personally met, every single one I've heard speak, everyone who has like showed their report, like literally every profitable trader, they all say the exact same thing. The game of trading is just risk management. That's what it is. Truly, truly, truly. Yap, yap, yap. Please pull a tarot card. We will soon. I'm wondering if we're going to get this 10 a.m. reversal. I do. Man, I kind of wish I took this trade at 9:50. I didn't, just because today I was trying to wait till 10 a.m., so it was still a little early for me. Sometimes I will trade a bit earlier, but when I see this, I know we hit an all-time high. We had pretty good news yesterday between earnings and the Fed, and then all of a sudden I see profit taking. It's just that to me. So I was afraid to chase it to the downside, because at a certain point, profit taking just stops, and then all of a sudden things settle. And then from there, we have to just figure out what the new trend is. Are more bulls stepping in and we rebound, or are more bears stepping in and it's actually time for us to continue to the downside? So for me, I'm doing my best to wait for this first batch of profit taking to end. Because right here, look at calls. No one's touching puts. When I say profit taking, it is very much profit taking. Calls are getting sold. Yeah, starting at, I guess, 9:43, there was a little bit of put buying, but this was mostly people selling calls. Now, we don't definitively know if they were selling calls to get into a position or to get out, but I think we could safely assume most of it was to get out, as in to lock in their profits. And that's why the delta is dropping. Right here, calls are getting sold. So for me, this isn't really bearishness. The reason we're going down is a lack of bullishness. So to the people asking, why is this happening? Well, what's interesting to me more than the psychology of other people is the objective data we can see. And I can see the deltas getting hit, but we're not getting hit because we're adding negative delta. We're getting hit because we're removing positive delta. Bulls are leaving the game. Bears are not entering the game, at least as of now. And we look at the Mag 7, it's the exact same thing. No one is touching puts on the Mag 7. In my mind, there's a big difference. When I see price going down in my mind is way different of, is it going down because the bears are getting more aggressive, or is it going down because the bulls are getting weaker? And in this case, across the Mag 7 and the S&P 500, even though from a technical perspective, I love this short and I probably would have made money, the reason I didn't take it is twofold. And I guess in a way, they're kind of one and the same. I'm trying to wait a little bit more, because to me, this isn't a strong bearish trend. This is a weak bullish trend. It's a weak bullish trend, and maybe you don't make that distinction, and that's fine. I'm not saying the way I approach the market is the best way to do it, but for me, this is what helps grow my accounts by 700K in 3 months. Is I'm just trying to stick to my rules. Maybe you like my rules, maybe they don't. Remember, trading is a very personal thing. You have to do things that make sense to you, and I'm just here, I don't know, trying to explain how the puzzle makes sense in my brain. And am I perfect? God, no. But I think that should make sense to everyone, that there's a big difference between, is the delta dropping? Is the market dropping because are bears getting stronger or are bulls getting weaker? And right now, what I'm seeing based on the first 27 minutes worth of data, we are seeing, obviously, the bulls just get weaker. The bears are not stepping up. And obviously, I'm getting all this data from Spot Gamma, which, by the way, is a partner of today's show, pinned to the top of chat in the description of the video. We are the only community on God's green earth that they give an 80% discount to. So if you want an 80% discount, if you want to check the options flow, if you want to see the big money positioning, if you want to see the Gamma map, the Gamma structure, they have a ton going on here. You can get a nice 80% off, like I said, pinned to the top of chat in the description of the video. Spot Gamma, if you use that link, that's how you can get the full access. Once again, 80% off. I couldn't imagine trading without it. It's just, to me, this data is too valuable, because once again, that's how I can discern, are the bears stepping in or are the bulls just kind of leaving? And as much as it's nice for a tool to help you make money, I actually personally find that Spot Gamma helps me stop me from making stupid decisions and really stops me from losing money I shouldn't be losing. I know that might kind of sound like the exact same thing, but in reality, that's where I find the biggest benefit is I use it as that final sanity check. I mean, how many times do we talk about Icarus? Icarus is a trading system that is exclusively based on price data, and it's on my monitor over here. And whenever it sees a setup to buy or sell, it paints a signal right on my chart on NinjaTrader. Unfortunately, Icarus does not take in options data, which is exactly why when you guys see me trading and stuff, I'm always looking over here to see if the signal's firing or not. But then before I manually decide to either take the long or take the short, I always quickly double check what's going on with options flow. because once again, Icarus is exclusively based on price data, and I like to just quickly fact check it with actual options data. And it's not just the SPY and the Mag 7. Of course, you have the NASDAQ, you have the Russell, and then you could even look at individual companies like AMD getting hit this morning. Apple was looking good, got hit, earnings after the market closes. Broadcom doing nothing, Coinbase going down, Microsoft getting murked, MicroStrategy getting murked, Meta popped going flat, Netflix not really doing anything, Nvidia slightly trending down, Oracle very much trending down, Palantir very much trending down, Tesla was fine, slightly starting to trend down now, and Google actually trending down, kind of bucking its recent trend of seemingly only going up, up, and up. So that's why I like to put over the price data with the options data. So people commonly ask me, could I fully automate Icarus? I could, but then it would be taking too many trades because it would be taking a trade every single time the signal fires. And personally, I like to skip some of the trades because sometimes I just don't like the options flow. And like, let's say it fires long, but I see the options flow going down and people are buying puts. Well, I don't really want to have exposure to that then. So I have the automated signal painting on my chart, but then I personally do not take every single trade because I like to trade with as many things aligning as possible. So not only price action, price momentum, but really the structure, and then on top of that, options flow. And then from there, if they all line and I could get in with minimal risk, that's what I personally would consider to be an A+ trade. An A+ trade. It's 10 a.m. Let's see if it changes. Well, thus far, 10 a.m. is giving us the 30-minute Orbo breakdown for sure. This is getting cracked. Look at that. Look at all those calls. Oh, people are now, it's speeding up because people just started to buy puts. So not only are we seeing that lack of bullishness that I was talking about, but the bears are starting to get a little bit more serious there. Look at that. They just started to buy these puts starting at 9:58. So calls are still getting sold, removing positive delta, and then you have puts being bought, adding negative delta. If you're introducing a negative to the system and removing a positive, that means at 2x the rate, you are going down, 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 which kind of explains why the net delta is already negative 3.4 billion in delta notional value. Wow. Does anyone know why Palantir is going down? Once again, that is the wrong question. I don't know how many times I have to keep... I feel like sometimes I'm just talking to a wall, but can someone help the chat member with that one? Because once again, that is not, whether you can explain it properly or not, it doesn't matter. It does not matter. You don't get a bonus for explaining it properly. You don't make or lose money by explaining it properly. What matters is it's going down. What is the risk? What is the reward? What is the price movement? Explaining it just doesn't matter, especially in the short term. Obviously, explanations can have a bit more utility if you're talking about longer term of like, oh, wow, look at it. They just got some big government contract, or if there's some new law. Like, yeah, of course, sometimes there's a big update that fundamentally impacts a company. But if you're talking about it in the short term, if you care about it intraday, this week, this month, it does not matter. It truly doesn't fucking matter. Can you explain delta? Yeah, delta is just one of the Greek values in the world of options. Couple ways to interpret it, and they're all equally accurate. You could look at the delta value, and that's the odds of it being in the money. You could look at the delta, and that's how much market makers have to hedge out that particular position. But basically what you need to know is when you are buying calls, you're buying delta. There's more delta in the system. Those are going to be like adding on. If you're buying puts, you're buying negative delta. So you're either like you're adding a negative or you're pushing delta down. So that's what happens in terms of the delta dropping. So think about it. If you are buying calls and that adds delta, you are adding a positive to the overall system, which is kind of a moniker of bullishness. It gives you an idea that market makers are starting to hedge to the upside. It gives you an idea that there's new bullish bets within the market. If you decide to get out of that call position, you're removing that delta to the system. Lack of bullishness, and it means that the market makers don't have to hedge as much. And then the opposite is completely true for puts. Remember, puts are just the polar opposite of calls. So when you're buying it, you're buying negative delta. So you're adding negative delta to the system, dropping it. That has implications for the market makers. And then when when you get out of puts, when you're selling those puts, you're removing negative delta, which has the net impact of rising the delta of the overall system. So a delta in the highest level is probably best described as a measurement of the bullishness and or bearishness of current options flow. So right here on the right side, we're measuring delta and we're looking at 0DTE calls and puts and all expiration calls and puts. You could see the delta is dropping. So this is telling you that the options market is in one form or another favoring the bears. It might be favoring the bears from increased bearish aggression. It might be favoring the bears from lack of bullishness, or it could be the combination of the two. And in this situation, starting at 958, it's the combination of the two. The bears are getting stronger and the bulls are continuing to get weaker. So I guess those are the three potential combinations, and also then the exact opposite. You can look at bullishness, bearishness. So you have overall the various combinations of putting those together. You could be like bullish on the call side, lack of bullish on the put side, or bearish on the put side and lack of bullish on the call side. So putting all those combinations together is kind of what we're measuring here. And of course, on this example, we're looking at the S&P 500. You could do it for the combination of the Mag 7, and you could also do it for individual equities. So very useful tool. If I'm being completely honest, I don't know how people would be successful trading without having that. And beyond the options flow, but just to see the positioning. Like right now, I could tell you, if in the event right here, no one should be surprised if we bounce at 6925. In fact, I already had it marked out. No one should be surprised if we bounce here. It is a sizable positive gamma. As in, this is one of the beautiful things about options trading is the open interest, as in the live plays, are transparent to all of us. You could see it right here. I could see that there is a put credit spread at 6925. Cool. Awesome. If that does not hold, I don't know if it will or it won't. The next clear level is somewhere between 6,910, and then there's a huge put credit spread at 6,900. A put credit spread is an overbet in the world of sports betting. It's basically someone out there in the world, or maybe a group of people, are saying that today we will conclude above 6,900. That is the bet. That's what you see right here. So like I said, some of equities trading is done via dark pools, and we don't really have transparency on it until after, so you can't see the pending orders. But in options trading, it's a single dealer market, and there's like a different regulatory regime in which it follows. But the end result is options trading is far more transparent. In fact, I would actually argue in all forms of trading, well, maybe not crypto, because crypto has the ledger, but you can't always see the pending orders. So I would actually argue in one way or another that options trading is actually the most transparent form of trading, because you can see not only all the trades in real time, but you can see all of the impact of previous trades from the live trades, the ones that are still open contracts. So you get to see where they're at. It's the blueprint of big money. So for me, how do I know where these bounce levels are? Like here, we broke this bounce, somewhat predicted. This bounce, somewhat predicted. I called out this level. Then we vomit to the next level. Look, it's a waterfall exactly to that level. Folks, I'm not fucking Harry Potter. I'm not going to Hogwarts learning this mystical, magical level of price prediction. It's relatively simple. All you do is see where the fucking big money is placed and say, oh, wow, that's where big money's placed. I wonder if there's going to be a market reaction there. So back to my, I guess, discussion and my argument of, hey, just pay attention to the big money and look for the market reaction there. That's what trading is, time and time again. Retail traders, we're not influencing the market of the bottoms and the tops. That's what big money does. And honestly, this discussion that we're having right now, that's the huge thing that we talk about in the Discord. Ask anyone in the Discord, day in and day out, we're looking at options flow, we're looking at the trace, the gamma map to know where the big money is, and we're just playing off those key levels. So literally the breakdown of where I'm giving you and these reactions that we're watching, it's all coming from that. It's exclusively coming from that. And pretty much throughout the day, we're just continually checking this. We're looking at the new plays. We're seeing how the map changes. So obviously it's a community of people who are into that type of a thing, but more so of like, it's kind of a nice alert system because other people, like, we don't have the ability to watch every single thing at every moment. So it is very nice to have other members saying, oh, okay, like we're coming up to these key levels. Oh, okay, here's a lot of positive gamma. Here's a lot of negative gamma. Right now, with the prolific usage of the derivative product that is options, they used to be called like, I guess the tail, like the dog's wagging the tail, like the dog in this stupid fucking metaphor was the equity, and then it's just wagging the tail, which are options. Right now, for how popular options trading is, it's not even the saying that the tail's wagging the dog. It is the tail. It is the dog. And like the way we're just keeping score is the underlying price. But right now, like clearly over the past 10 years, options trading has become more popular. But ever since 2022, which is when they released 0 DTE SPX options, it is the thing. It really, really is. So if you are trying to be a trader and you are not looking at options data, it's no longer one of these arguments like a decade ago where you're like, oh, you're missing some of the picture and it could be helpful. It's at the point right now where if you're not looking at options data, you're like missing 95% of the picture. Every single month, every single quarter, there's more and more contracts. Like it is not slowing down. It is the thing that traders are trading, and you got to be paying attention to it. You got to be paying attention to it. Hang on, I'm watching this right here. Now that we're talking so much, I feel like I've missed a couple of my own trades that I would have liked. Okay. And what am I doing? Right there. I saw it bounce up, similar to before, lethargic bounce, maybe potentially failing. My risk is well defined. My target is well defined. I'm taking on minimal risk relative to my reward. I am trading with trend. Folks, it's just a setup. I don't know if this particular one is going to work, but what I could tell you is I'm trading with the intraday price structure, the intraday price momentum. I have minimal risk relative to my reward. Cool. That's the trade. I don't know if it's going to work or not. Of course, you want every single trade to work, but you have to be basing it on your trade decision. The decision I just made was we traded to a key level. We bounced. We danced around. We tried to bounce again. It was lethargic. We had a lower high, and it looked like we started to get hit. Of course, it might bounce out of here. This might just completely rip my face off. That is completely possible. But once again, let's grade it on the quality of the decision. And it actually, yeah, the risk right there. I had put my risk. Well, you can see it on the cues. I put it right at that high. Just that was my risk. And now I need to decide. Hang on. I'm trading 2 tranches of my accounts separately. So I need to decide what I want to do here. So I try to take this breakdown just in case it was a little bit of a dead cat bounce and we start to go back down. Obviously it bounced up. I had well-defined risk, and that's how you survive. My hit rate is barely over 50%, but the way that I'm so net profitable is because when I'm right at large size, and when I'm wrong at small size, or ideally that's at least the plan. I was trying to play this little extra breakdown right there. I saw this lower high. I was basing it off of that, had to take the hit. And we're going to give it a little bit of time here and see what happens. Hang on. Whoa, that got really beat up. This one, unfortunately, it looks like it wicked me out. I used that as my high. See how it just popped right above, literally perfect to wick me out. But you can't cry about it because sometimes it's not a wick out and it just keeps going and you take on a more sizable loss. So you really can't cry about it too much because you just don't know. You don't know how it's going to go. I was attempting to trade with trend and one of them got beat up. What is that risk right there? All right. Buy stop market. I do have my risk in where it should be, I think. Am I doing my mental math right? We're going to find out. We're going to find out. I'm taking a second stab at it because I still like the setup. And once again, the setup is not complicated. Icarus fires. After Icarus fires, I do my sanity check. I look at the 5-minute. That is bearish. 10-minute, bearish. 30-minute, bearish. 4 hours breaking down. 5-minute right here. bearish, 10-minute bearish, 30-minute bearish, 4-hour breaking down. Momentum is bearish. Then I look at the intraday trend, lower highs, lower lows, lower highs, lower lows. Then I fact check this. Okay, Delta got hit, went flat, seems to be breaking down. Same thing, SPY. So I'm going through my checklist. My checklist is, did Icarus fire? What's going on with momentum with ES and NQ? What's going on with the intraday structure? What's going on with options flow? If all of those things are aligning on one side, and then I can also get in with minimal risk or risk that I'm willing to accept, that's the A+ trade, folks. An A+ trade doesn't work all the time. I mean, I'm lucky if it works 60% of the time, but it's an A+ trade because, once again, if I'm right, it's an asymmetric gain relative to an asymmetric loss. What account is this? Stop is at break even. So no matter what, your boy's making money. No matter what, worst case scenario, I'm out at break even. So if it bounces from 25 all the way up to 72, yeah, that's going to suck. I don't want it to happen. But also, like I said, folks, I'm not Harry Potter. I'm not Voldemort. I'm not Albus Dumbledore, whatever the fuck his name is. I can't magically make this go where I want to, but I can protect myself from something fucking crazy happening. And in fact, what I'm going to do here is just put in a price target. And if it hits, cool, I've made my money. And if not, whatever. And then I also need to manage these accounts. Stop's going to go to break even there. Once again, it's just stop management, folks. It is stop management. Like, that's all it is. We don't need to over-engineer it. We don't need to over-engineer it. 703. We'll see. We'll see. Hopefully it doesn't bounce up. It might bounce up. It's actually bouncing up quite aggressively right now. Maybe I'll get protected at 50. I see people right here selling at 58, so hopefully that level protects me. You never know. I should also be protected by the concept at this point. You would think that they would want to at least at this point evaluate 6,900. The issue is it could bounce before that, but if we're getting this close, you'd think they would want to get within a couple points just because that's where we see some of this big money positioning. Some of the big money positioning. But let's let it play out, folks. All I can tell you is if I'm wrong, it's a free lottery ticket. My stop's at break even. I deeply believe that's probably the best way to engage. Oh, come on. Let's see if we can make some money. Let's see if we can make some money today. I'm kind of looking to see where the big money is positioned. I thought I was looking. Oh, yeah, they're at 25,700. Sorry, am I on the wrong side? Let me move over here. Right here, you could see some buyers at 25,700, and you could see some sellers up here at like 67. It seems. Is it going to knock me out? Knowing my luck, it's going to overshoot it, knock me out, and then puke right to this level. But if that happens, it's a bummer, but it's a part of trading. Sometimes you just have to accept it. All I could tell you is I'm protecting myself. Worst case situation, break even. Best case situation, I make some money. I make some money. If you guys had to bet right now, which one do you think is going to get hit first? My profit target or my stop? Uh-oh. It's getting close to my stop. Get away. Get away. Get away from me. If you guys had to bet, if you had to, do you think it's going to hit the stop first? Man, you guys are naysayers in here. A bunch of fucking naysayers, if you ask me. Dude, you are wrong 80% of the time. LOL, this clearly bears from the start of the day. Yeah, sure. I'm wrong 80% of the time, which explains why I'm actually not. Like, literally, my stats are out there. I do entire trade reviews. That's what's so funny about the internet is you get clowns like this saying that type of shit. You're wrong 80% of the time, which is objectively just the wrong measure. Like, I share my entire trade performance every single month. I show all of my trades. I show all of the net results. I literally show everything. And then you just get people on the internet who, what I would bet are not profitable traders. Like, you're wrong 80% of the time. How am I wrong 80% of the time? All right, that got knocked out at break even. The other one didn't, though, interestingly enough. This one I got a better fill on. Do I just want to close this one now? Is it going to run it all the way up to 700? The point of control, I'm going to leave it just because we're going to see. Just because. %. And what's crazy about that is beyond just being a stupid fucking comment, it's also it's showing a clear misunderstanding of math. You can actually be wrong 80% of the time and be a net profitable trader. That's possible. There's so many people that are, for whatever reason, obsessed with your hit rate. And that's not, like, it doesn't matter. What matters is your hit rate and your average win and your average loss size. So this idea, like, you could be wrong 99% of the time and still be a net profitable trader. That is very, very possible. And I don't know if it's the current state of education globally or like what's going on there. Hang on. But people just don't understand basic math. Like, that person was saying it as if it's some sort of dig. First of all, I'm not wrong 80% of the time, but even if I were, you can still be net profitable. And people just seemingly do not understand that. They just have no appreciation for that actual math, which kind of fascinates me. Like, they say it with such confidence of like, ha, got you. What are you talking about? It just kind of just shows you how stupid you are to, like, literally, you could be wrong 99% of the time and still be net profitable. You can be right 99% of the time and still be a net loser. And it just kind of shows you the current state of not only a basic understanding of math, but also the current state of like retail trading. That one got stopped out. That for some reason, the average person just seemingly, well, maybe not average, but that people don't comprehend. And then there's also a really strange correlation with people who like uniquely don't understand it, but then they're being the most confident in their statements of like, yes, I am right. And like, here's like, it's just embarrassing. It's like absolutely embarrassing. But hey, I guess to each their own. Like, imagine being that confident in letting the world know that you just don't understand basic math. It's kind of fascinating to me. The Dunning-Kruger effect? Yeah, it very well could be. The question here is, we kind of have this like triple quad top thing going on at 25. He probably counts with his fingers. Maybe. You never know. On SPX, what are we actually doing here? Okay, so it recaptured 25. Is it going to stay up here? We had this overshoot. Surprised it didn't get down to 905. That's what I was trying to play a little bit more. We're going to take a stab at it. Wow, these ranges are quite large. Quite large, if you ask me. There's not many things more humorous in this world than overconfident, wrong people. I always get a unique kick out of it. What is the main reason for the sharp drop? Because people are buying and selling at a lower price, which is actually the reason for anything ever happening in the market, whether up or down. It's because people are buying and selling at either a higher price, a lower price, or the exact same price. It's pretty much literally always the exact same explanation. It's because people are buying and selling higher, lower, or the exact same. And I'm curious if what's going to happen here. This is kind of the interesting watch. Can the SPX get above and hold above 930, or is it going to come back down below 25, back down like 20, something like that is probably the interesting watch here. This is what I am very much interested in. Overshot it. We haven't quite made new highs. Why I'm interested in it is because if it goes, that actually might change the structure, as in from lower highs and lower lows to a new fresh high. Silver is getting destroyed. Silver is getting destroyed. I need to be careful and make sure my risk is where I need it to be. Okay, I set my risk up. I forgot to put my risk on the one trade just so if it does go bad, obviously I don't want to get blown out. Obviously, I do not want to get blown out. Where can I even lower my risk a little bit? Yeah. Take a little bit of risk off the table. I'm watching the 1 minute right now, mostly, to see if this is actually gonna... The main thing that I'm paying attention to is right here. Not only do I have the initial balance already up, which technically we haven't filled out the initial balance yet, but I'm watching, see how the 1 minute popped up. I'm seeing if it's going to fall back over. That's really what I'm paying attention to. And let's see if it does. Let's see if it does. Oh, if I start to see this weakness right here, would I add another contract? If I did, I'd want to lower the risk on the first one. I wouldn't mind a rejection at 800. We're back at this key level at 800. A little bit more volatility than I would like, but I'm wondering about either the acceptance or the failure right here at 800. Time will tell. I guess while we're watching this, we could do a quick, might be a higher low. It could be an interesting decision point here. Like I said, my risk is already set, so if it gets hit, it won't be that bad. It's just always obviously keeping the risk in control. It's about to get hit. Oh, is it going to turn? Silver is getting decimated. Mag 7, little bit of an upswing, nothing too crazy. The SPY, a little bit more of an upswing, really battling it out at this 25 level. Could be an inverse shoulder, head, shoulder type of a thing. I'd be a little bit more convinced if it gets above and holds above 30. If you took that trade, that's not a bad trade. I mean, your risk is just the swing low. It's minimal risk, and obviously you don't know the next one. It is counter trend, which I'm not going to be the biggest fan of, but it's not insane. It's definitely not insane. Lowering the risk a little bit, just a little bit. I'm watching these recent spikes on NQ over here. I'm just kind of watching this shelf. I'm wondering if this is going to break below. I might throw on another contract here. Do I want to? How froggy am I really feeling? What's the flow looking like? How froggy am I feeling? We are getting hit. I think I missed it. I was going to throw on another contract, but I think it's already a little bit too far gone in terms of a risk-reward perspective. So I'll just do what I'm meant to do. I'll move the stop to break even, no risk. I'm going to move the stop to break even, no risk. I should have added, I was questioning it because I already took a hit on the day and I didn't know if I wanted to double down. I was a little slow to react. What I should have done, just from like a teaching perspective, is I should have added another contract here at 1028 and risked that recent high. On when we swept this low, anywhere between 73 and 85, I should have added another contract, moved the stops to break even, and rode this down with two. I missed it, but just in terms of like, I guess, a teaching perspective, that would have been the play, because you're still trading with trend, your risk is well defined, you're able to double down, you'd be up double the amount. That was the play. So I fucked that one up. That's on me. That's on me, Tonto. That one's on me. Does that make sense? Are there any questions on that? I guess now that we're here attempting to teach about it. I'm moving it a little bit to in profit. I'm gonna let the bigger contracts ride, the bigger counts, and then for the smaller counts, I'm trying to lock in at 702.50, just because I know there's going to be buyers stepping up right here at 25,700. Silver's getting hammered. If you're trading it, you're degenerate. I love it. I wish you the best of luck. This move from 20 down to like that on one contract, you're talking thousands and thousands and thousands of dollars. It's fucking insane. Absolutely insane. I do wish you the best of luck with it. I'm being careful about this SPX because of these types of bounces. We're right back up to the point of control. Am I going to just get wicked out again? Am I just going to get wicked out again? We'll find out. Watch the IB bounce. Yep, that's exactly what I'm paying attention to. IB is the first hour's high and low, which is pretty much right where we're at. We just kissed it, 718. I was looking for a quick flush, and sometimes you could overshoot it by a little bit. Obviously, this is not one of those examples. Unfortunate for me. I was hoping that 700 would get targeted, and it still can, but obviously this is still a pretty gnarly 25 point bounce in the meantime. So maybe I get lucky, maybe I don't. I did already move my stop, so I'm making money on both trades. So I'm not too worried, but of course, there's always that part of you that just hopes it's going to be working out pretty easily. Right here. Here we go. Come on. Let's get these fills. Let's get these fills. Let's get these fills. Fuck. The premium I want to sell. Oh, how close are we? Come on, brother. Come on, brother. Oh, brother, oh, brother, oh, brother. We're right there. We're right there. Thousands of dollars to be made if we can just drop a little bit more. Come on. Let's hear it. All right, for this particular one, let's vote again. Last time you guys were right. You voted that my stop was going to get hit before my profit target. What about this one? On this particular play, what do you think is going to get hurt first? My stop or my profit target? Which one? Where do you think we're at on this particular play today? Target. We're almost there. Bada bing, bada boom. All right, we locked in 1.2, 1.2, 1.2, 1.2, 1. Okay, so we locked in 1.2 on 1, 2, 3, 4, 5, 6, 8, 9, 10, 11, 12, 13. 13 accounts, so that's about $15,000. And then obviously I also have this beautiful runner, which we're going to see how far the runner can actually go. I'm down 25. All right, we're going to move this down just to be protected, just in case there's a huge bounce. And we're going to ride the runner as long as we can. So 1.2, or I could just close it out and lock in the 1. Well, hang on. Let's do a quick analysis. We didn't hit this level quite yet. All right, I want to know what's going to happen there. I set that alert. I kind of want to just market close it when we hit 6,900 because I do expect a reaction there. Once again, I don't want to overstay my welcome because I see this gigantic put credit spread. That's a lot of positive gamma. That's a lot of negative gamma. I see quite a bit of a positioning there. In fact, there's 11.7 thousand contracts. Could it break? Yes. If it does break, there's a lot more money to be made, but I don't need to risk that today. It's just what's the point of that risk? So I kind of want to see this test. And granted, you might count this as a test because we got awfully close. We got to 6,901. So this might be it, which is kind of why I already updated my risk. But to be completely honest, how I want to manage this is I want to hear that alert go off at 6,900. And I just want to market it out. And hopefully it's a flush down to maybe 660, 670, something like that. I could update my risk again, I suppose. So I'm short at 787. I could have gotten 100 points. I didn't realize that. In retrospect, I probably should have just taken the 100 points, but maybe I'll get lucky. I'm going to be like I said, I'm listening for that alert to go off on SPX to hit 6,900 flat. When I hear that, I'm just going to market close this out and take whatever money the market's offering me today. That was it. Boom. Stuck to a plan. I told you exactly. The alert went off. We hit 6,900. I damn near bottom ticked it. About 1.4K locked in on the big accounts. About 1.2K locked in on the small accounts. You could add this all up. I have 18 big accounts. No, 20 big accounts. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So 20 times 1.4, and then 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13? That doesn't seem right. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Okay, so 13 times 1.2. How much money is this? How much money did we just make? 13, so that's 15.6. 15.6. 43K. 43K, 44K, something like that. Not bad for a guy who's wrong 80% of the time, right? I mean, fuck. Imagine what I could do if I was only wrong 75% of the time. But here I am, just stuck being a piece of shit trader who's wrong 80% of the time, folks. Being right 20% of the time seems pretty nice. Yeah, dude, imagine if I could pump these numbers up to being right 25% of the time. The world would be my oyster. The world, just imagine what I could do, folks, if I could just be right 5% more of the time. But on a real note, not to be, I don't know, picking on that fucking dipshit too much, because hey, some people are just retards. It happens. It's not my fault. For those of you who don't want to be a smug little asshole, remember, your win rate is not the end all be all. Please, please understand that. I understand fully that in social media, there is seemingly this massive, massive pressure and influence to be right all the time. people for some reason laud, oh my God, he's right 90, 95, 98% of the time. I get it. It sounds good. But unfortunately, it's a gigantic misunderstanding of math. You can be right that often and not be net profitable. You can be wrong 90% of the time and still be net profitable. For me, I'm right about 55. I'm wrong about 45. Those are my recent numbers, to be completely honest with you. But don't get so focused on that. That's just a part of the equation. The equation is your expected value. That's how you know if you're net profitable or not. It's the percentage of time you're right multiplied by your average win size, and then you subtract the percentage of time you're wrong multiplied by your average loss side. So these people who are like just obsessed with your win percentage and your loss percentage, they're not respecting the other part of the equation. They're not expecting your average win size, and they're not respecting your average loss size. So please understand that I'm not saying that those numbers are useless. I'm saying it's just literally half of the equation. You have to have those other numbers to know what the fuck you're doing and to know what you're not doing. So please just be careful of that. And as we've even seen from whoever this random chat member is, they were just led astray. Like I'm trying to not take it personally. Like I think they were taught wrong. This idea of like, hey, you're just wrong all the time. Dude, you could be wrong all the time and still be net profitable. You could be right all the time and still be a loser. So like, it's just social media has created it where there's too many fucking stupid people who have a platform who unfortunately don't know what they're talking about. I would wager 99% of other finance content creators, streamers don't understand the basic mathematics of the market. They are not traders. They are marketers. They are preying on the affiliate links and YouTube revenue and sponsorships. They're not traders. If they had to pay their own bills with their own trading, they're net losing traders. Like deeply, I would bet you 99% of finance content creators are not net profitable traders. You have to be very, very careful. I know some of you who have been here, you've been around the block, you get a good understanding of who's full of shit and you're realizing that most are full of shit. But if you are new, you gotta be careful. Your base assumption should be the person that you're listening to about active trading has no fucking clue what they're talking about. You should start in that mode. You should start in that category, and then from there, they should prove it to you that they actually know what they're talking about. And when I say that, they show you their broker statements. They show you their live trades. They have some form of transparency rather than just like, trust me, bro. And I am not saying that as if, oh, this is the best channel and I'm the best trader. I'm not. I'm not everyone's cup of tea. I'm not everyone's glass of wine. So even if you choose to leave here after this stream, if you're like, you know what, fuck this Mac guy, like he's just not for me, I understand that. But I beg of you, the one thing to bring forward with you as you find that community that you like, make them prove to you that they actually know what they're talking about. Demand transparency. Demand it. Broker statements, live trades. And I'm not talking one broker statement, one live trade. Go for a longer period. Go for 1 year. Go for 2 years. Make sure that it's actually proven. If all of a sudden they're like, they called out a trade, but they don't really address it, or all of a sudden they're only showing you their winning trades, but you know they took it. Like, if it's not adding up, I get it. We all put our blinders on when we're learning about trading and finance because we all want to be in a situation of better financial health. I fully understand it. But unfortunately, even for the smartest people out there, it causes you to put on blinders and things that in other aspects of your life you would know are a red flag. We just unconsciously avoid it because you want it to be true. I've been there. I've spent tens of thousands of dollars when I started to learn how to trade on all these trading gurus and gurus because I thought, hey, I see the picture of them with the cars and the girls and partying and all these other people signed up and it's that good, so it must be good. So basically it was because the crowd was following it that I assumed it had to be good. I'm sure there's a psychological word for that of like just the assumption because of like it's the crowd mentality, it's the crowd psychology. And then there's probably another word for like you just want it to be true. So whether consciously or subconsciously, you're avoiding all the red flags. Folks, I've burned tens of thousands of dollars doing that type of shit. Please let me share my pitfalls with you so you can avoid doing it. Yes, do I run a premium Discord? I do. But one of the first things you're going to see in my Discord, the welcome message is 90% of my content's already out on the internet for free. It is not necessary for everyone. It's not. My Discord is for the people who want to take it to the next level. They want that community aspect of other people who view the market as a mathematical statistical matrix, and we're trying to play the smart numbers time and time again. It's not some fucking pump and dump. It's not some vibe feel. It's literally just math and odds and big money positioning. It's rather basic, but guess what? It's what wins. And remember, kind of circling back to this concept of if everyone's talking about it and everyone's doing it, remember 95% of traders are worse off after they start trading rather than before. As in 95% of active traders are not net profitable. So remember, if you're doing what you hear everyone talking about, if you're doing what you hear everyone saying, there's a higher, like a very high majority chance that you are in the group of people not doing the right thing. Like just clearly not the right thing. So like I said, I get it. You might think I'm a smug asshole. My wife thinks I'm a smug asshole. Like I can't blame you. You're probably objectively right on that. But even if you choose to never engage with me and my content, my community again, moving forward, I'm still just begging of you. You're a retail trader. I want you to be successful. I beg of you, don't move forward in the world of retail trading education with these blinders on. Demand proof, transparency, statistics, something to back it up rather than just fucking trust me, bro. Please, please, please. A lot of people are asking for flow. Mag 7's getting destroyed. SPY is also getting destroyed. Unfortunately, if you're in the Discord, I can't sell premium today because it's just simply too far gone. Piper did fire. I'm going to put that in right now, just so you have it, but the premium is just already too messed up. So it's just going to give you an idea of the momentum on the day. And I guess technically various forms of momentum on the day, but I don't think, unless there's like a big intraday pop, just so everyone in the Discord knows, I can't sell. It's just the risk reward is not there. And hey, sometimes the best trades are doing absolutely nothing. Absolutely nothing. I wish I did it earlier. But had I done it earlier and then it turned against me, I would have said, why in the world did I do this so early? So just to throw that out there. So if you're in the Discord, Piper did fire. It's in there. I don't think I'll be able to trade it just because the premium's so decayed already. It sucks. I mean, I would want to sell something all the way up at 7,000 and we're already trading at 6,886. We're legitimately breaking down. So too far away from me. If you want to be aggressive with it, you maybe sell the 55s. If you want to be super aggressive, you can sell the 30s. It's just not my cup of tea. But the flow, yeah, it's getting beaten up right there. Very much beaten up. Look at that. It's just a dagger to the downside. Very quickly, if you're trying to do Apex the way I am, right now they're running the best deal that they run right here. I have my own 20 Apex accounts, 15 big ones, 5 small ones. I'm trading on some Lucid ones. I'm trading on some FFN ones. I'm trading on some Take Profit. But right now the sick deal is with code Goonie, 90% off. So you could do the 50K eval for like $19. So right now code Goonie, that's there. And right now also the code that we talked about tomorrow, as I kind of alluded to, it was for yesterday, but the code doesn't expire. You could get into the Goonie Trading Discord for free for a month. Test drive everything. See if you like me, trust me, see what's going on in there. And if you like it, awesome, great. Stick around. If it's not for you, I understand. Just cancel your account within the first month and you'll never get charged anything. If you wait till after, you're going to get charged and there are no refunds. So just pay, like set an alert on your calendar, be an adult about it. But anyway, code FOMC will get you in for free. And then Spot Gamma is the partner of today's show. If you use that link in the description of the video, also pinned to the top of chat, you'll get 80% off, which is this tool right here. Folks, cool. Well, I made my money. I'm stoked. I don't think I'll be able to sell premium today because it's already decayed. The only way I would be able to do it is if we get a large bounce. In the bounce, I might be able to sell premium, but I'm not going to chase it to the downside. Even though it would probably work, it's only one time of it not working that cost me tens of thousands of dollars. So I just don't feel like taking on that risk today. And in reality, I'm just pretty stoked. You guys saw a couple losing trades. You know what we should do? Maybe this would be helpful. Do you guys want me to do like a full trade review? Like with that, can I be honest with you? My producer and I have been fucking ripping out. our hair, and he has less hair than I do, and I'm losing my hair. So we're running fucking low on hair in the Goonie trading, like, I guess, board of members here. So not a rhetorical question, a very honest question for all of you. Right now in the world of social media, yes, streaming is a thing, but no one rewatches streams, especially financial streams, because everyone cares about the data in real time, especially for trading. But the other aspect of content right now is short form content. If you're not making short form content, you might as well just be a fucking loser. And if you look at my channel, we don't make short form content, which means I must be a fucking loser. So my producer and I, for the longest time, have really been putting in a huge effort to try to figure out like the best short form of content. And we're kind of stuck between a couple of things. So I want to give you those ideas, and I would love the feedback of what you guys would watch, what you wouldn't. And the first one is actual trade reviews. Like, so not only did I stream it in real time, but would you guys would you find it beneficial of like showing the entry, of showing the exit, and giving it, like a perfect explanation of every single thing I saw? And obviously it would be a sub 30-second video, a sub 40. It would definitely be less than a minute. Would you guys like that? Would you like me reacting to other people's trades, whether it's Wall Street bets, big wins, little wins? Would you like that? Would you like me covering breaking market news like Tesla beat on earnings, that type of a thing? So our leading idea is reviewing the best trade of the day and kind of driving home why it's the best trade of the day. Would you like that? Do you like the reaction? Do you like the breaking news? Do you like a mixture of it all? Like once in a while it's a trade review, once in a while it's reacting to other people's crazy trades. Do you just want it to be pictures of my feet? Are you guys like kind of a creepy group, more so leaning in towards like OnlyFans? Or you're like, yeah, like I want to see you like put your feet in pudding, or like something like that? Like, are you guys like weird little fuckers? Like, what gets your rocks off, I guess is what I'm trying to get into. Feet reviews. You want me to review other people's feet? That I have not thought about that. Producer, write that down. There's interest in me doing feet reviews. So how would that even look? Like, oh, this is a nice pair. That's a nice set of feet. Look at the cankles on that one. Interesting. All right, this is why we turn it over to you guys. You're always getting interesting. You're always getting interesting commentary. Interesting. I would have never thought of that. This is why we ask you guys. This is why we this is why we ask the smart people in the audience. You guys are always pushing the envelope of what kind of content is possible. What about reactions to other popular creator videos? It would have to still be short form, I suppose. So that would be more like their trades and their comments, that type of a thing. What if I react to my reactions to those people? Like, what if we make it really, really meta? Like, what if I start only reacting to my reactions to other people and I comment on my quality as a reactor? And then, of course, that could lead us to the next level of me reacting to my reactions of my reactions to other people's trades. Like, just like, should that be the series? It's just like every video is me reacting to that previous reaction, like just an inception of reactions. And then the base video is just like a foot video, like a naked foot video. Like we start with the naked foot video, throw that out there. I react to that. Then I react to the reaction of my foot. Then I react to my reaction of the foot. That could be something. Funky Feet Fridays. We have ideas. These ideas are all percolating. They're all percolating. Why he's an asshole based on math. That's a funny series idea. Explaining why other gurus are assholes, like mathematically. Thoughts on SoFi? I'm about 50-50. 50-50 goes up, 50-50 goes down, I would say. Terrible Toes Tuesday. How about animal feet review? All right, that's over the line. You're getting a little bit into bestiality. Hey, I know we have free speech in this country, but you're not really near a legal line, but you're definitely near some sort of weird moral line. CXX, I'm clocking that name. I'm locking that away in the old cranium here. It's a little sketchy, man. That's a little, I mean, people into feet to begin with, you don't really want to trust them. And now you're into animal feet? That's turns animal feet off screen. You're like, no, that wasn't me, man. My cat ran across my keyboard. I'm not into animal feet. You sicko. You sicko. I would say we should check your computer, but there's probably stuff on there that none of us want to see. Probably some weird shit in there, man. All right. Where's this thing puking to? What in tarnation? I mean, at this point, we might be seeing sub 400. This thing is just diving. This thing is just diving. Drunk Matt taking trades. I go from dry January to like wet February. I just completely invert it. An entire month of like health and sobriety and dieting just to switch it up starting next week. Oh, that's crazy. I'm actually almost done with it. I only have 2 more days. That would be like particularly fucked up of me to break it this weekend on Friday or Saturday, like right before. I think at that point I would like legitimately have a problem. You did a full dry January? Not yet. I still have 2 days to fuck it up. I have 2 days to fuck it up. Basically, I can start drinking as soon as the government shuts down. As soon as the government officially shuts down on Saturday, I'm able to pop a cold brewski. It wasn't just dry January though. I did the full thing. I did a lift and cardio every single day. So a lift session, a cardio session, dry January, and I counted my macros. I used an app to count my macros. So I kind of went like balls to the wall for this particular January. And I didn't really even intend to do it. I was drinking really heavily up until New Year. So I was like, yeah, let's just take a couple days off. And then I made it to that first weekend. I was like, you know what? At this point, we might as well try dry January. Like, why not? I wasn't really intentionally planning on doing it. But one thing led to another because I hit the Christmas holiday season a little bit too hard. Couple too many eggnogs for your boy, so I wanted to give the old liver a break, and it led then to a full dry January. And as I was starting it, I kind of started lifting. I was like, dude, let's just go for it. Like, so for the thus far, every single day of January, I've done a cardio session, I've done a lift session, I have done obviously dry January, so no alcohol, and then also counting my calories every single day. And it's actually kind of fucking nuts. I'm obviously down quite a bit of weight. Clearly, if you've ever done this before, a lot of the weight is bloat. It's insane how much bloat weight you can lose really, really quickly. Like really, really quickly. And what's going to be fun about this is my plan is for February to do the opposite. So the way I did cardio and lifting every day, specifically, I'm not going to want to move my body. I want to go like a couch potato mode. So no lifting, no cardio. The fact that I didn't drink every day, I want to do the opposite. I now want to drink every day. And then in terms of calories, I'm going to just see how many processed foods, like simple carbs, how much. I'm going to see if I could eat a slice of cake for every single day. And then what we're going to do is we're just going to like average those two things together. And then I'd basically just be a normal person. So it's going to be interesting. We're going to see which one performs better. It's just, we're using my body for science, basically, is what I'm trying to say here. Seems mid-year has come early. I don't know what that means, but maybe. How did being sober impact your trading? Well, I was drinking in November and December, and the stats are pretty much the same. I had one losing day in November. I had one losing day in December. And even though January is technically not done, I've only had one losing day. The profits, I think, are slightly higher in January, but that might just be because my accounts are bigger. So the percentage gain is probably roughly the same. I wear Whoop. I have noticed that my sleep is way better. So when you first start doing this, because also part of my diet was I was taking creatine every day. I've been reading way more about how good creatine is for you. We already knew it was good for you, but there's more studies coming out saying it's like even better for you than we've ever thought. So with hitting cardio, the gym, Creatine, I'm taking in way more protein. I try to hit 200 grams of protein a day. It's really difficult. In all reality, I'm lucky to hit 150. So that's pretty hard on your system to digest. And then when you do that with stopping alcohol, at first your sleep takes a huge hit. So week 1 of January, my sleep was trash. And like, once again, I'm measuring all the like metabolic reactions to it, the physical reactions to it. Week 2, it stabilizes at a low. Week 3, it starts to increase. And then week 4, which is where I am right now, it's like my best sleep scores ever. Like I might be the best sleeper in the world for all I know at this point. I'm not sure if you get a special medal or a cookie or something for being the best sleeper, but dude, my sleep scores are fucking off the charts now. And what's funny about it is like when I was talking to ChatGPT about doing this, because you could use ChatGPT to create meal plans, you could use it to create lift plans, and I was talking to her about like, I don't know, my resting heart rate, this and that. I did that week 1 and it was fucking spot on with all of its predictions of how it's going to go. It's like, dude, week 1's going to be horrible. Everything's going to get worse. You're going to hate your life. Week 2 is going to be shitty, but it's going to stop getting worse. Week 3, you're going to see an improvement. Week 4 is going to get better. And part of me, I don't know. It says by week 6. So if I choose to continue into mid-February, I guess that's when you like get to entirely new like peaks. I don't know how many of you have been through a similar process like this. If you have, I would love to hear yours. But at least according to the great old world of AI, apparently week 6 is like when you're like feeling like fucking Superman about the whole situation. So part of me is interested in that just to see like what it would feel like, how I would feel. But I don't know. Double down in Feb and join a Muay Thai gym. Dude, fighting is such a great form of exercise, like without a doubt. Like truly, it's just there's not one near me. And I'm very biased to the stair stepper. I like to battle the stair demons. I like to battle the old stair demons. You're 85% wrong about your sleep score. I'm 100% wrong about everything in my life, I suppose. I stopped drinking beer a year ago and doing that, which sucked ass. I lost over 100 pounds, which is nuts. I also haven't been sick at all, which is amazing. I honestly thought that was going the other way. I thought you were going to say I stopped drinking beer a year ago and now I just drink hard liquor. Yeah, I gave up on beer. It's for pussies. I just figured if I'm going somewhere, I might as well go faster. I'm a straight tequila man now. I thought that's where that was going, but I'm happy your message broke in the other way of better health. I quit beer. Straight Everclear for me now. Oh, brother. All right, folks, that's pretty much it. I think we're going to be bottoming out somewhat soon. We're getting into positive gamma here. I wouldn't be surprised if there's a reversion at 6,900 and then we just get pinned there for the rest of the day. That's the main thing that I would be looking at. There might be a bounce off of 60. I don't know if we're going to get that low, though. I guess we were somewhat already that low, so that's not that crazy. But there is support at 6,860, but I'd be looking for a reversion back to this put credit spread. You could join up for the Discord for free. It was free yesterday, but FOMC will technically work until February. So free month if you use that code FOMC when you're checking out. Apex, 90% off with that code Goonie, and then 90 off of Apex with code Goonie, and you can use the link for 80% off of Spot Gamma, who is the partner of today's show. Whatever you're choosing to do, hey, stick to your trading plan. Remember, that's how you're going to survive. And more important than your trading plan is keep your risk in control. Folks, that's what I have for you right now. Hang on, I am on the wrong screen. I'm going to go hang out in the Discord. If you have any issues on the Discord, you can reach out to me, contact@goonietrading.com. It's also on the website. There's a giant contact page that will personally come to me and I will personally help you out. There are some people who are having issues on the Discord side of things. There's like age restriction stuff related to Apple. So if that happens to be you and there's age restriction, that is not the website. That is not Discord. That is iOS rule and safety. You have to go to your dashboard, like the web app of Discord, and change your settings, because it's just like a kid privacy type of thing. So if you're seeing that issue on an Apple phone, try going on your dashboard, a web app, and you could probably fix it from there. So like I said, you can reach out to me. If you have issues, please do not hesitate to reach out to me. You can DM me on Twitter. You can DM me on Instagram. The fastest way is going to be email. You could even DM me on Discord. That one's going to be pretty fast too. We're going to post an update video later on tonight, a wrap up of the market. And then from there, we are going to stream tomorrow morning. We got a little bit of a payday Friday coming. So update video tonight, payday Friday tomorrow. That is the plan. I appreciate all the good vibes. I hope you guys make a fuckload of money. I'll catch you guys later. Peace.